Let's connect then with Gautam Duggad as well, who joins in on the show to chat about his outlook on the markets, earnings, as well as individual stocks. Gautam, hi there, good afternoon. Let's talk earnings in specific, and there are certain sectors where you're expecting double-digit decline. That's particularly cement, utilities, as well as oil and gas, and some of the other sectors that you can just flag off. What's the reason that you're expecting this pain, and do you think that it could perhaps be pronounced in the coming quarter, and then things could start to stabilize?
Good morning. I think this quarter is a bit unparalleled in the sense that perhaps we may look back at this quarter 3 years, 5 years down the line and say, this is one of those quarters where nobody could predict anything. The quarter obviously was characterized by a lot of lockdowns, gradual, recovery of most of the sectors. But as things stand, there are many sectors where we are expecting losses. So out of the 15, 16 sectors that we track, for 7 sectors, we are expecting losses. Big ones like auto, metals, telecom, of course. So those are sectors where we are expecting losses. Then there are many sectors where we are expecting double-digit declines, the ones you already highlighted. In fact, it will suffice to say that except private banks and technology, no other sector is going to show any positive YOY growth in profits. And then at the margin, you can say that pharmaceuticals is one where the YOY decline could be single digit, but that's about it. All other sectors, consumer, oil and gas, NBFCs, cement, capital goods, you're expecting a significant decline. And whether this will perpetuate, very tough to say, because last 10 or 15 days, we have seen resumption of lockdowns in different cities, in UP, Karnataka, even Pune. I think it's very tough to, predict earnings, but be that as it may, what we are, building in right now for FY21 as we move forward is a gradual recovery quarter on quarter. And on a full year basis, we are still expecting the Nifty earnings to stay flattish versus FY20. In fact, our FY21 EPS for Nifty is almost identical to FY20 EPS of 468 rupees, which will essentially mean that for 4 years now, the Nifty earnings will stay flat in FY21. So that is as far as earnings are concerned, but most of the these things are discounted in the price. I think more than the quarterly earnings, what investors would like to focus on is the corporate commentaries and some of the underlying trends on the ground, given the ever-changing situation that we are witnessing over the last 15 days in particular on various lockdown measures that several state governments have announced, because it has impacted the sales again. We saw the commentary of DMart. Then some of the consumer companies are also facing problems because of this, frequent lockdowns now.
Okay, Gautam, let's talk about the auto space, and you too seem to be of the view that rural demand is definitely going to outpace urban demand. In light of that, there have been certain tweaks to the overall portfolio. Fill us in with names that you've now added, and what's the outlook for autos?
Sure, auto has seen a massive rally in the last 2 months actually. In fact, when we did the model portfolio exercise in April, we changed the stance in auto from neutral to overweight. Since then, I think in line with the market, auto sector has also rallied strongly. And now we are not comfortable with the valuations that current stock prices are discounting. So we have removed Maruti and Eicher from our model portfolio after a long time. We don't see much upside from the current levels over there, at least in the short term. What we, however, like is rural-oriented plays like M&M, which is where we've been very positive. And there is also a change in management, which has come after a long time. And they're also talking about rejigging the capital allocation and focusing on a certain healthy ROE target. Plus, the fact remains that tractor business is in a solid momentum despite all the challenges that we're witnessing in the urban market. So, slightly higher tilt of rural portfolio, both from the revenue as well as SOTP perspective, does place them in a slightly more advantageous position. And second stock that we have included in the model portfolio is Motherson Sumi, where we think that current valuations do offer relatively attractive, risk-reward ratio. But one thing that I want to highlight is most of the companies in almost all the sectors over the next 6 months will see a lot of volatility in their earnings estimates. We've already seen 30% cut in 4Q FY20 for FY21 EPS. Then in this quarter's preview, when we did the exercise again, we saw a marginal upgrade. And I expect this changes to continue till at least September before things stabilize on the ground. So at the moment, FY21 earnings projections have, while they give you some indication about things on the ground, but basing the investment decisions based on just FY21 P&L will not add much of the value.
Gautam, I'm afraid we're completely out of time, so I'm going to have to call it a day. But thanks much for sharing with us your outlook. Some of the other stocks within the mid-caps include Dabur, Coromandel International, ICICI Securities, as well as Gujarat Gas. That's the view coming in from Gautam Duggad.